For this question, please refer to your Unit 4 study guide. This question is an example of a company estimating its bad debts using the aging method. And the aging method is where we take our accounts receivable, this is how much our customers owe us, and we age it by how overdue it is. Now, the first category is not yet due to be paid, which means that we gave our customers probably 30 days to pay us, and those 30 days haven't expired yet. So that is the amount that's not yet due to be paid. The $95,000 is overdue. They haven't paid us in the 30 days. They're 1 to 30 days past due. And then the next category is 31 to 60 days overdue, and then over 60 days. You'll notice that as the invoices or as the accounts receivable gets older, the expected percentage that we're going to be uncollectible becomes larger as well. The theory is that the older the accounts receivable, the longer it takes for our customers to pay us, the more likely we are not to collect the money from the customers. So in this method, when we're asked to prepare a journal entry to estimate our uncollectible accounts, the journal entry is exactly the same as the other example that we did in this unit. We're going to debit bad debt expense, and we're going to credit the allowance for doubtful accounts. Remember that we're using accounts receivable to calculate the number that goes in the journal entry. So when we calculate it, the result is the balance in the allowance for doubtful accounts. So we have to be careful. We need to determine if there's already a balance in that account. And in the question, it tells us that we're starting off with $2,100 in that account. And it does say that it's a credit balance. So what we're going to do is we're going to take the accounts receivable that they gave us in the question, and then we're going to multiply by the percentages. So we're going to take the 215 and we're going to multiply it by the 1%, and we get 2150. Then we're going to take the 95,000 multiplied by 4%, and we get 3,800. Then we're going to take the 35,100 multiplied by 10%, and the 15,000 multiplied by 60%, and we get 9,000. We add all of that up, get 18,460. And that number right there, because we were using accounts receivable, is the balance. We have a quick look at our T account for the allowance for doubtful accounts. Remember that there was a balance in there to start with, and we want to end up with 18,460 as the balance of the account. We have to determine how we get from $2,100 credit to a debit, or sorry, to another credit of 18,460. So we're going to subtract those two numbers to determine that the adjustment has to be $16,360 to this account to make it correct. So that's the number we end up putting in our journal entry. We're going to debit bad debt expense for $16,360. We're going to credit allowance for doubtful accounts for $16,360.